Welcome to the Power Trader Open House. I am so glad you're here. We've got a full house at the open house, coming up on 50 people and climbing quickly. I do need to let you know the training's for educational purposes only. Please don't play stupid games and win stupid prizes. Any results shared should not be considered typical. I'm going to share a bunch of results, and we're going to get a bunch of trade ideas placed. Please, for the love of everything important in your life, if you are not using a funded trading account, reach out to us, info@tradesmartu.com, and we would be glad to tell you more about this. In 2026, there is no reason anybody should be risking their own hard-earned money trading when you can risk other people's money trading. What I love about that is the guardrails that are put around it. So they're not dumb. You know, they're these funding partners that we have are kind of like Hertz rental car. Hertz has figured out how to make a business out of renting cars to people who have accidents. And our funding partner has figured out how to make a business giving trading accounts to people who sometimes lose money. And they've got guardrails and protections around it, which is what you should be doing anyway. So it just prevents you from doing dumb things and losing money. And I feel a lot more secure knowing that you are not learning how to trade using your own money. Here's where we're headed today. I'm going to do a quick market forecast. One of the things you'll notice if you're new to Power Trader is I'm able to share a lot more in this particular setting than I would do on YouTube or an email or whatever, because this is kind of private and in-house. So we're going to go through several PowerPoints that have some interesting numbers and charts and figures, and that's kind of how my mind works. Some people really connect with that. Some of you don't. If you're more of the artist type, hang out for just a second. We'll get into charts, and that'll scratch that artistic itch that you have. But I do love some numbers, and we've got a few of them for you this morning. I do want to do a quick review of last week's trade. I wish in a perfect world, if I could know everything months in advance, we would have done the open house last week, candidly, because it made me look really good. It was a great week of trading in Power Trader. And so I'm going to talk about it because we can. Hopefully this week will be equally good, but I will warn you as we start going into the market forecast that I think the back half of February and going into March is going to be a really tricky season to trade. And we've got some tools in our tool belt to navigate that, but it's not going to be easy. Then we'll do some skill building. This is new in Power Trader. For those of you that have been longtime Power Trader fans, you are surprised by this. You're like, what is this? We never do skill building in Power Trader. It's one of the changes that I'm making for 2026. And essentially, if you kind of took the best of my notes, we've called it different things. It's been the Foundation series in the past, which is still available. You can go buy that if you want. But basically, I've taken the best tools that I have and divided it over 52 weeks. So if you were to stay with me in Power Trader for a year, you would get the best of my notes, the best of my skills. Because it's February and Fibonacci also starts with an F, that's where we're starting. It's not designed to be sequential necessarily. I'm creating this so that it's a little 15, maybe we'll drift into 20-minute chunk every now and then that gives you a core skill. And then if appropriate, we'll talk about it as we look at trade ideas. And if not, if there's nothing that connects the dots there, at least it'll be another skill that you've built going forward. So today we're going to be talking about wave theory and do an introduction to Fibonacci retracements. Then at 9:25, I literally have an alarm set. Whatever we're doing, it stops. I need a sound effect like screeching tires. And we will go look at the S&P 500 to see if there is a qualified morning glory trade. This week, I think we've got some other trades in addition to that, but when the market gets difficult, we are going to stay profitable and making progress by using trades like the morning glory, which are by design a short day trading strategy. It's a day trading system, really. So we'll do that. If it's a disqualified morning glory, cool, no problem. We'll finish up whatever we didn't get through with the skill building, and then we'll move into some trade ideas. In full disclosure, going forward, I may back up the start of Power Trader by 30 minutes. By adding the skills session in there, I think it's going to be a lot to get through. So we'll see. I also don't hate letting a little bit of time drift by after the market opens before we start actually executing on some of the trade ideas. That's not a That's not a bad thing either. So I'm debating, but Power Trader, which historically has been an hour, probably needs to flex to about an hour and 20 minutes, maybe an hour and a half at the high end. So we'll kind of figure that out as we go, as we add this new session in. So let's jump into our market forecast. This is on the good side, and by good I mean continued bullish for the S&P 500. Seasonally speaking, we are in the 96th percentile of good weeks. And so by that, I mean a rolling 5-day trading period. So because it's Monday through Friday. So this is out of a scale of 100, 100 being the best. This is the 96th percentile best week of trading, bullish. So that's really good. That would suggest historically that we've got some wind beneath our wings. As far as the month is concerned, not so great. 3 months, things usually start to turn around. Here is the S&P 500 annual composite chart. This goes back 10 years. And I want you to notice that we are like right here. So it makes sense that we are in the 96th percentile on the annual composite chart. Historically, it's shot up, and then it starts to come on down. And in a little bit here, I'm going to show you a presidential election cycle chart, which in my opinion only augments this little downturn that we're expecting. Also, just tuck in the back of your minds here, there are so many signals that I'm seeing line up on the S&P in particular, also the NASDAQ, that would confirm that we're looking at some kind of a pullback going into March and into even into April. That doesn't mean market crash. And typically, there's a couple different measurements, but typically a change in trend direction requires a 20% drop or more. And I don't think we're going to get there necessarily. I don't think we're going from a bull market to a bear market. I just think that we're going to experience a little bit of a pullback. And so this is why it's tricky right now. You know, you're hesitant to jump in any bearish trades. And in full disclosure, I probably won't take a lot of bearish trades during this retracement. But at the same time, the bullish trades are getting slim pickings. So this is good because I think we're right here turning potentially problematic as we go into the rest of the month. Another thing that's good, a bright spot in the market, we looked at this last week in Power Trader. We're seeing a rotation from large cap to small cap. This is a relative strength of small cap stocks, ticker symbol RUT, the Russell's 2000, compared to the S&P 500. So basically, as this line is going down, it means the S&P 500 is performing better. And as this line is going up, it means small cap stocks are performing better. And we've seen this is a week old now, but it only improved over last week. So if you were going to go digging for gold, now that gold has pulled back, see what I did there? Those of you that don't track precious metals are confused, but that's okay because we're about to clarify that confusion. But if you're going to go digging for some gold, I would encourage you to take a look at the small cap stocks. We don't often spend a lot of time there, but I've got 4 tickers on our watch list, and we're going to probably distill that down to 2 trades going forward. So the Russell's 2000 is a bright spot. Now that's the good. The bad that we've been watching for a long time is this bearish divergence that continues to play out on the S&P 500. In fact, I took this screenshot this morning as I was doing my final preparations, and if we do come up and make a higher high in price sometime this week and MACD continues lower, I think it's nearly a nail in the coffin. The blessing of bearish divergence is it's a very accurate indication. The downside of bearish divergence is that it's an untimed signal. So, you know, back here we were looking at bearish divergence and we could have been like, oh, the sky is falling. And then it continued on up for another year, almost. But this is a really long divergence to be playing out. I'm not going to take the time to go back right now and see how many other times we've had almost a 9-month divergence, but they don't typically last for years. That's an anomaly. So this is in the bad category. Also in the bad category, meaning maybe not so bullish in the S&P, is the second year during a presidential election cycle. That's the light blue line. We are currently in the 38th day. I don't know why I drew a dollar sign. We're in the 38th day of trading for the year. So that's somewhere about here. These are number of trading days. So again, this is kind of lining up with what we saw in that February seasonality, maybe a little push higher, and then we come on down. Based on this blue line, which is just a composite of second year presidential terms going back to H.W. Bush, this may draw a little bit more, but the consensus here that we're seeing from several different areas is a rounding over and a bearishness that could be on the horizon. So I'm very cautious about being overly optimistic about the S&P right now. That's the bad. Now we get to the ugly. I mentioned this briefly in the YouTube forecast. Here's kind of the behind the scenes details that I was looking at. So this is IGV, which is a software ETF. It's a conglomerate of a bunch of different software companies. And I didn't take a screenshot. I could show you here when we get to the charts, but typically IGV will track with the S&P 500. Very seldom do they diverge. And this right here is showing you when IGV was more, the red line is 3 standard deviations off from a 50-period daily moving average. So this is like a Bollinger Band with some special sauce on it. Typically a Bollinger Band is a 20-period simple moving average. This is a 50 on this chart. And typically a Bollinger Band cloud is 2 standard deviations. This is 3 standard deviations, which is really far away from the daily moving average. It's more smoothed and it's further away. Like, this is a big deal. And typically what this is showing you, this Richter scale, like how helpful is this, Josh? What I want you to see is when we come down and we tag these 3 standard deviations away, it's usually a signal that we're going to shoot right back up. One might call this overbought and oversold. And when we get extremely oversold, it shoots back up. But here's what's interesting about what happened recently. Sorry. Before I move on to what happened recently, here's why that's good. If you want to see some goodness in this, when we have historically been 3 standard deviations below the 50-period moving average, the go-forward results here have been pretty stellar. Look at the percent of the time it's been positive. A year later, 100% positive. 6 months later, 87% positive, so on and so forth. There's a lot of black, which could correlate to green on this screen going forward. But here is where this is different. Talk about an anomaly. This has never happened before in the history of IGV, which only goes back to, I think it was 2001 when this ETF launched. Might not even be that far. So it's not an extremely old ETF, but it's got 15, 20 years under its belt. We did not even get above. If you take this Richter scale and blow it up, remember this gray line is the 50-period daily moving average, and then the dark blue line is how far away we are from it. We did not even get back above the 50 daily moving average. This has never happened before in the history of IGV, and only 10 times has it happened where IGV, this is I don't think Chris Burgess will know what the name of this graph is, but there's 2 axes here. The horizontal axis is IGV, the percent that it's below its daily moving average, and the vertical axis is the S&P, how far it is away. So only 10 times in history has IGV been 10% or greater below its 50-period daily moving average, while the S&P 500's been positive. It's been above the 50 daily moving average. This red box zooms in on that. 3 of those times, nope, I'm circling the wrong thing. The black dots, sorry, 4 of those times is recent events, just happened. 3 of those times were from 2022, and then once it went back to 2002. Okay, yeah, so I think the IGV went back to 2001. Now, this is pretty disconcerting. This is a chart of IGV. The silver line is the software ETF. Here's that 2002 time where this happened. IGV sold off. Here's the 2022 time. There's 3 instances here where that occurred. IGV sold off. And now we just recently completed 4 times where IGV was 10% or greater below the 50 daily moving average, while the S&P 500 was above it. What do you think is going to happen? Now, this isn't a huge sample size, but if history kind of rhymes with itself, we're looking at a prolonged bearish move. Same thing, except instead of IGV, this is the S&P 500. So you didn't even notice those changed, did you? I'm going back and forth here. Look how similar those charts are, because typically IGV, yeah, we're gonna have to back up the start time because we didn't even get into our skills yet. I need to go look at the morning glory in just a second, though. You didn't even notice the change because IGV and S&P 500 typically track together. The red dots are the same spots. Look what happened to the S&P. Sold off. S&P sold off. Here we are. This is a problem. I think it's only amplified by some of the cracks that are starting to show up in AI land. I don't think AI is crashing. I don't think AI is going away. I think they're maybe a little bit over their skis. You like that Olympics analogy? That was smooth. I think they're getting a little bit over the tips of their skis, and I think the market is ripe for a correction. With that said, I'll come back and look at last week's trades here in just a second, but I do think we might have a qualified morning glory. I don't know why my mouse is moving at a snail's pace. Golly, is a barely qualified. So we need to be below this lower blue bar or above this upper blue bar to be a qualified morning glory. I'm going to run with it since we just got 4 minutes to pull this together. It's going to just be a really fast trade. So I do this trade on SPXL. This will be a bullish trade. If you're unfamiliar with the morning glory, you should get familiar with it because it's amazing. There's our target. Let's use our fib to figure out our stop. This is so blasted tight. I was hoping, yay, praying for a beautiful morning glory. And this is qualified. Technically qualified. Also technically super tight. We're not going to be able to do a full position on this. But that's okay. It's probably actually better that way because Mondays are the lowest probability on the morning glories, although they've been good to us recently. And also, I'm a little bit concerned, just a little bit concerned with the volatility that we saw on Friday. Okay, so our stop, did I do that right? That seems like a really big stop. Yes. No, that is right. So stop is 150%, 0.63, that's right. I guess I'll leave my fibs there. So size of my stop is $1.75. I don't think that's anywhere near 250 divided by $1.75 is 142 shares. No, we're not even gonna be close. That'd be $32,000 we need, and we got a $25,000 account. So we will do, I'll just do 90 shares on this. Actually, maybe I'll do 80. I'm on XPXL, so for those that were in Power Trader last week, I had a bonehead move, and I did all this on SPY, and then I didn't notice it until it was too late, and it just took off and went immediately to target. Look, it's just barely disqualified here, but I think we're going to still send it. $1.11 and $1.75. So all my students at Power Trader made a lot of money. In fact, it turned into a 3-hour trade if you had the stones to stick with it. But no, Josh was sitting on the sidelines because I was an idiot and put it on the wrong thing. So SPXL, which is a leveraged ETF on SPY, bullish trade. I'm going to buy at the market price because these things go. We want in when we want in, and the bid-ask spread on SPXL is pretty kind to us. So now we've got, what do we have? We got 50 seconds to kill here. So we'll get this placed, and then I'll review some trades. We'll do some skill building, and then I'll do some trade ideas. We're probably going to go long. I'm so sorry. Ricardo, the morning glory is a day trading strategy. I can't give you all of the specifics here because it's a premium strategy that people have paid for. But basically, we're looking for low pre-market volume. Let me not get distracted here. Low pre-market volume with a very specific size gap, and then it's a fade play. We fade back into where Friday's close was. It's a very high probability trade, 8 seconds. Actually, let me just do this. Okay, we're open, we're in. Is my target right? It looks like it's set right. My stop looks like it's set right. Okay. And we'll let that kind of run its course there. They can be fun to watch, but not while I've got so much going on here. So sometimes these things open. Last Monday is a good example. I'll show you guys. And they basically go straight to target. Wednesday, Tuesday, Monday. Yeah. So this is why old Josh missed out last week. Look at this. So this was a bullish. In fact, I still have it set up on here. This bullish trade went to target in the first 15-minute candle. And then I forget who was it Mike? One of the students in class here held into this candle and then got stopped out in the retracement. But as this continued on up, if you would have held out to the peak and by some stroke of genius or magic got out at the peak, that was actually a 3-hour trade, which is $750. Not a bad way to kick off your Monday. So this is a beautiful looking morning glory. This is a better ratio, better size morning glory. The one we've got going on today is not ideal, but I wanted you guys to see me place a trade, and here we go. So quick review of last week's trades. Let me get back to current events here. Usually there's a button you can push. The big winner last week was Howmet Aerospace. I feel like that's a hard word to say, Howmet. This was Monday. This is when we set up the trade. It didn't really go anywhere Monday. Tuesday gapped up. We had a pullback, but our stop was down here. So a little bit of consternation on Wednesday. Thursday, we're back up into profitable. And then Friday, straight to target and then beyond. This is not a trade that you can chase or enter today, but basically this was one of our Son of Bonacci setups that we were able to snag. This was a small cap stock, so this is how all those pieces come together. Recognizing the rotation from large cap into small cap stocks, we did a search for small cap stocks. We found Howmet Aerospace, and boy did it reward us. JP Morgan is another one. This was kind of a trade for those that missed our Wells Fargo trade. WFC was one that we looked at 2 weeks ago, and it was back here, Son of Bonacci trade, and it went great. Straight to target. We had the gap there, and I felt like it had gone too far to be chasing Wells Fargo, but JP Morgan's like a cousin to Wells Fargo. And so we got in this on Monday, Power Trader last week, and then again on Friday, hit actually on Wednesday, this one hit its target. So 3 days on JP Morgan, straight to target, full R, $250 cash in your jeans. That's $500 for those that were keeping track with Howmet. Avgo was the big stinker. If you watch the recording, which you don't have access to if you're only here on the open house, but my regular Power Trader peeps, we were sitting right here, and the candlestick kind of looked like that when we were in Power Trader last week. And I was like, I think I said, I was very cautious on this. I was like, it really probably will break out, come back, test resistance like that. And I was like, I kind of talked myself into it. I said, you could get in with a quarter trade, quarter position, and then if it comes on back, you could add to your position, which is exactly what I did. I got into this trade here with a quarter position. It came back to support. I added to my position. It continued on down, and I got stopped out the same day. I was stopped out of Avgo on Monday. So it ended up being about a 0.64 R loss, I think, was a little bit over a half a R is what I took for a loss on that. So Chris Burge is in here. I blame him at some level because Chris Burge has told me that Avgo, Broadcom is the name of the company, can only go up. He was like, it doesn't know how to go down. So I think if I was going to pass blame, it would be Chris Burge's fault that I got stopped out of that. But we preserved capital. We only lost a little over half an hour, and that was our big stinker for the week. Apple was another one that we got into. We were keeping an eye on earnings here. I did not trade through earnings. We got in on Monday, and then I got out on Monday with the funded trading account. I got auto exited. I did not re-enter on Tuesday. Those of you that have a traditional account could have put quite a bit more cash in your jeans on Tuesday. But then we had earnings, and then we saw this pullback all the way to our entry again, and there was an opportunity to jump in Apple. Nothing had really changed on our forecast, and it went straight to target on, let me see, this was Friday. Shoot, this was 2 weeks ago. Apple was not a trade last week. Apple was a 2 week ago trade. What was our fourth trade from last week? I don't even remember now. Maybe we just had three. That was from last week. Let's, I got a bad feeling the S&P is crashing, seeing how Apple is going down. Did we already get stopped out? We may have been stopped out of our trade. Let's just go back over to, no, we didn't. We could put $25 cash in our jeans right now, but I don't hate the long lower shadow. Apple spooked me a little bit. It will drag the S&P around with it. This is the downside of it being such a tight stop. Normally, we could move our stop up to just above break even there and lock in some profit, but I'll just kind of let this ride a little bit here. We're still up $12 on that. It'd be nice to make $100 or so on this. Also be nice to make $20. Tell you what, I'm going to do this. $40 done, closed. All right, I just made y'all $30. Okay, $30 cash in your jeans. It probably will go on and make $100, but whatever. I have a surprise for you. You can take 1/3 of that $30 and join me for another month. So we're trying something out here. Those that have not had an opportunity to experience PowerTrade, or even if you have, if you're coming back as far as this group is concerned, we want to give people an opportunity to experience a full month of PowerTrader. It's $10. It's kind of a no-brainer. Like, here's the next step you take. I'll put this link in the chat pane here. We just made y'all the $40, or I guess $30. So you keep 20, put 10 of it back into your your PowerTrader subscription here. I think you're going to love the changes that we've made to PowerTrader with the skills building, with the skills building. I've got some production stuff that's going to be coming up too. That's going to be a lot of fun. I think it's going to make it a lot more interactive. You get access once your trial ends to a Discord. We have a pretty active Discord going on with PowerTrader. We're going to be sending out some transcripts and summaries via email. So if you can't come live, if you're at work, you just want to scan the email, there's a lot of upgrades coming to PowerTrader. So come try it for a month. Finish out your Fibs and Feb cycle here. You'll get to experience all of that, and I think you guys will love it. Regularly, PowerTrader is going to be $149 a month, which is, what is that? That's like $40, $30 a session. It's pretty reasonable. So there's that link. Let's jump into our skills building. I'm going to kick myself because this is going to go straight to target. Yeah, the red line is where we got out, and I think it's probably at target right now. Yep, it would have hit our target, right? Look at this. Isn't the morning glory amazing? I'll show you where the target is. This is Friday's close. Yeah, so it would have hit our target and got out. So those of you guys that stayed in, congratulations. You would have made closer to $100 on that trade. You could afford 10% of that to put towards your PowerTrader trial. So that link is good for, I don't know if we put a time limit on that, but we'll say about a week until next Monday's PowerTrader, and take action on that. Okay, let's jump into our skills building. I'm going to move quickly on this. I got to find my PowerPoint again. So Fibs and Feb, but I want to start off with some theory that will help you understand fibs a little bit better. So we're going to back up a half a step and talk about counting waves. We'll get into fibs at the tail end of this, and then the bulk of it will come next week. We'll get into how you actually measure your waves and what we're actually measuring and all that. So let's talk about wave theory. Briefly, as we get started here, a little caveat, I typically look at waves from a bullish perspective because there's a saying, the market takes the stairs up and the elevator down. We just have more wave opportunities. They're easier to see all the way around if we look at this from a bullish perspective. Theoretically, the inverse is true from a bearish perspective. I'm just not a super bearish trader. I know there's a lot of sensationalists out there that love to romanticize bearish markets because they move fast and they're volatile, and yeah, you can make a lot of money really fast, and you can also lose a lot of money trying to predict when a bearish market is going to come, present circumstances included. I promise you, as the market starts to roll over, all the perma bears are going to come out. They're like, see, we told you so, the market's going to crash, it's unsustainable, the S&P can't go higher, and then 2 months later the S&P is higher. So I'm just not a perma bear. If you want to be sensational, watch YouTube, other than the Tradesmart channel, of course. If you want to be practical and put cash in your jeans, maybe look at this a little bit more clear-eyed. So there's two types of waves. The motive wave goes in the same direction as the trend. You can think of motive waves as an opportunity to make progress towards your goal or your target. Then there's corrective waves. Corrective waves are counter trend, and you can think of these as a retracement. Sometimes they're large and sometimes they're small retracements. So the sequence goes like this. Motive waves typically have 5 segments. Again, since we're looking at this from a bullish perspective, it would be 5 up. 1, 2, 3, 4, 5 waves up. Corrective waves then are complex, but typically have 3 segments associated with them. You're going to see coming up on a slide pretty soon. I wouldn't worry about becoming a master of corrective waves. If you want to master any skill, master figuring out where wave 1 is, and then put fat stacks of cash in your jeans on waves 3 and 5. More on that coming up in just a second. All wave segments begin and end at pivot points. So all the work that you've done previously on support and resistance and identifying pivot points on the chart is going to really serve you as you begin to count waves. So waves have different parameters to them. Wave 1 is difficult to spot until wave 2 completes, because you don't really know if this is part of the corrective cycle or if it's a motive wave. How do you know if it's a motive wave? You're making progress. In traditional terms, we would say it's a higher high and a higher low. When you start seeing that, you're like, oh, that was a wave 1 back there. How cute it was. Wave 2 always retraces less than 100% of wave 1. For the nerds out there, you guys are loving this. For my practical students, let's make sense of this. Again, we're making progress. If wave 2 came back below wave 1, we're not making progress anymore in the direction of the trend. Again, higher highs and higher lows. This is where that comes from. You have to have a higher low from what? The low of wave 1. Sorry, my pen tool's acting goofy, so I'm drawing like I'm a kindergartner. Wave 3 always travels beyond wave 1. It's never the shortest, and it's usually the longest. That is such an important statement right there. That statement alone will put fat stacks of cash in your jeans. What if you gave yourself the gift of being a wave 3 trader? It's never the shortest. It's usually the longest. Wave 4 is similar to wave 2. It always retraces less than wave 3. Wave 4 also typically fails to enter price territory of wave 1. Again, if this sounds nerdy, what are we talking about? We're just talking about making progress. Wave 4 typically does not enter the price territory of wave 1. This is good to know if you're looking for support zones. So again, you guys have pounded this out in your heads. Old resistance becomes what? New support. We typically don't go back down into the price territory of a wave 1. You've learned a lot of this in the past. You've just not necessarily applied it to wave theory. Then wave 5 is kind of like wave 3. It extends to, but often beyond, the end of wave 3. I got another slide on this coming up, but wave 5 is also a really good, long, strong wave to trend. Now, in addition to these core waves, there can also be things called extensions. So when you're looking at your chart, you're like, golly, it seems like the market just goes up and down and is a wave 1 or wave 5, or maybe it's wave 6. Spoiler alert, there's no wave 6. What you're typically seeing are extensions, and this is where it can get a little bit creative, we'll say. Wave 1, 3, and 5 frequently have extensions that will typically form another 5-wave pattern. So we can swap out this wave 3 here and swap in another 5-wave pattern. And so some people will make a mistake and they'll be like, okay, wave 1, wave 2, wave 3, 4, 5, 6, 7, 8, 9. Like, what's going on? No. What's happened here is wave 3 has some extensions to it. Now, let me help put this into context for you. Remember, wave 3 is typically the longest. How does it become the longest? Well, it hangs out in that bullish wave 3 sentiment. That's not the right word. Wave 3 vibes by giving itself some extensions in there. So what you might start doing in your charts, if you see a bunch of waves and you're like, Josh, it just looks like, the market goes up and down, up and down, up and down. Start looking for groups of 5 and seeing if they, in context, will fit into a larger 5-wave fractal is the technical definition of that. Corrective waves, I'm not going to spend a lot of time here because many fortunes have been lost trying to predict corrective waves. Do not apply the making progress principle to the corrective waves. An example of this is the expanding triangle. Corrective waves are irrational, crazy, and can be difficult to trade. The guy that actually wrote the book on this, Bob Prechter, literally is like, we don't know. It's an amazing book. And then they get to these corrective waves and they're like, Bob's your uncle. Don't trade them. Unfortunately, it seems like everybody's attracted to trading corrective waves. So this is my advice to you. Don't trade them. So here's what it looks like on a more traditional chart. This chart was from like 1900. Not literally, but can you all remember when the S&P 500, ticker symbol SPX, was back at 3,600? It actually came from 2022, so 3 years ago, almost 4 years ago. So let's take a look at it. Wave 1 is difficult to spot until wave 2 completes. So there's your wave 1. Wave 2 always retraces less than 100% of wave 1. So there's your wave 2. Did that come back less than 100% of wave 1? Yeah. Wave 3 always travels beyond wave 1. It's never the shortest, and it's usually the longest. Now, you can already see in here some of those subdivisions. 1, 2, 3, 4, 5. Or maybe it's more like 1, 2, 3, 4, 5. That's probably a more accurate drawing. Wave 3 always travels beyond wave 1. It's never the shortest. It's usually the longest. I think that's actually a typo in there. Wave 3 always travels. No, that is right. Wave 3 travels beyond wave 1. That makes sense. Wave 4 always retraces less than 100% of wave 3. So wave 4 did not come all the way back to the beginning of wave 3. It also typically fails to enter the wave 1 price territory. Check. Wave 5 extends to, but often beyond the end of wave 3. So here was the end of wave 3. Wave 5 extends to and often beyond the end of wave 3. Cool? There's your corrective cycle. Good luck with that. And then we start back in. Motive and corrective waves can be combined together to create waves within a larger fractal. So I love this. What is this called? Roman cauliflower or something like that. Roman broccoli. Each of these little cones looks like the other cone that's inside of it. So you can see. Let me draw it better. Drawing is hard. So there's kind of your cone, and then you've got these cones that are inside of it, and then the little nubbins that are on those cones look like what? Like the larger cones in front of them. And the same is true with wave counting. You've got cones upon cones upon cones. So here's a typical 5-wave sequence, wave sequence, 5 waves up and 3 waves down. And then we tack on another one, 5 waves up, 3 waves down. We tack on another one, 5 waves up, 3 waves down. And those all start to combine to form a larger fractal. Now we've got a single motive wave, 5 waves up. All the 5-wave sequences up are the the directional, and then the retracements are the corrective, directional, corrective, so on and so forth. So here it is back on the S&P 500. There's our 5 waves up, our 3-wave correctional. This is where we ended that previous example, and now it continues on. Wave 1, continue, 2, 3. Wave 3 is typically the longest. Wave 4, wave 5, and then we get back into corrective again. And then all of those can combine to create a wave 1, 2, 3, so on and so forth. 4. There we go. Now here's where it gets fun. Our waves have personalities to them. Wave 1 is typically part of a consolidation process. It's difficult to trade, not a lot of profit to be made on a wave 1 by the time you realize it's a wave 1. Wave 2 is often low volume and low volatility. Here's where it gets exciting. Wave 3 is strong and broad and with good volume. Wave 4 often trades sideways. Wave 5 is strong, yet a little less dramatic than wave 3. I forget if this is coming up on a slide or not. If I was in your shoes, I would become an expert on these 2 waves and then get a minor on these 2 waves so that you know when wave 3 and wave 5 are coming. Corrective wave characteristics are crazy. Traders think on wave A, this is only a pullback, and so the bear trap is set. Wave B, the bear bull trap is to be doomed by wave C. So if we've got a 5-wave sequence up, everybody's just thinking, oh, this is a pullback and it's going to continue on. And then that's the trap, it's set. And then wave C is a type of 3rd wave in that it liberates all of the profit from ignorant traders and transfers cash to the informed traders' genes. Speaking of which, the saying came before this, but I haven't shown this butt picture in quite some while here, so I'm glad it could make a showing today. Cash in your jeans. So here's how you put cash in your jeans. I would not trade the retracements of wave 1 and 4. I just wouldn't do it. And I wouldn't trade the corrective waves at all. Wave 3 and wave 5 are what you see us try to identify in power traders. One of the reasons I want to start off with this today. My whole job coming into Monday's session is to show you stocks that are sitting at this point right here. And then we trade bullish. Wave 1 is sometimes a possibility, but again, they can be difficult to spot. So usually we kind of luck into them more than actually intentionally finding them. But our system that we use to find a wave 3 and 5 will sometimes point out a wave 1 as well. You say, well, Josh, what about the corrective waves, or what about these retracements? I'm telling you guys, like, go look it up on YouTube. It's a popular thing to do, but take a lesson from the salmon. Salmon also swim against the current or the direction of the trend right into a grizzly bear's mouth. I wouldn't do it, is my recommendation. I would trade with the direction of the dominant trend and or with the direction of the market. Now, here's how we apply this to fibs, and then I'll move on and take a look at some trade ideas with you guys for this week. Waves often have correlations to the golden ratio, which is what we use to measure our fibs. Fibs help accurately forecast the size of the retracement, and then our extensions, where we're going to be targeting the exit. So here's your most basic retracement. Wave 2 and wave 4, those are the pullbacks, are excellent candidates for measurements using the preceding wave. So we can find where this is going to stop by measuring our wave 1. And what you'll see us do next week is identify these zones and put those zones on there. And what we'll say, and you'll learn this next week, as long as we trade to or within but not below that Fibonacci zone, then we are still operating within the framework that we are expecting. As long as we trade to or within but not below those Fibonacci zones, we are still operating in a bullish framework. If we drop below the zone, we either need to take a look and realize, oh, we were measuring an extension and treating it like a core wave, or something is changing. Maybe we're getting into a corrective cycle. That's how we avoid getting whipsawed in these bear traps that everybody else falls into because we're seeing the Fibonacci framework break down. ABC can often be measured and compared to previous motive waves as well. This is a second type of tool that you'll learn in 2 weeks called the ABC tool, where we measure point 1, point 2, point 3. I did that wrong. We'll measure point 1, point 2, and then measure for point 3 because there's a relationship between a wave 2 and a wave 4. ABC can often compare previous corrective waves as well. Wave 3 can often be forecasted off from wave 1. So if you want to know where this is going to come to, measure your wave 1, and wave 3 is often a fractal or a Fibonacci fractal off from wave 1. There it is on your chart. And wave 5 target can often be forecasted based on wave 3. So if you want to know where wave 5 is going to end, measure wave 3 and project it on up. That's what we're going to be getting into in the 3 weeks ahead during Fibonacci, Fibs and Feb. Fibs and Feb. Let me check the questions real fast. Scott, how'd you do on the Morning Glory? Good night, y'all. This was so good. Hold on. Here was our original target. Scott's one of my longtime power trader students. He's a stud. Scott, you might have been the one last week that made all the money, and that was a 2R trade. Now, I don't know that I would have top ticked it. I don't have a tool to tell me exactly when to get out at that top. But if we did, for sake of argument, and if we had been able to take a full-size position, which we could not, our parameters would not allow us to take a full-size position. But this would have been a $500 trade right there. It's a 2R trade. Incredible. You're welcome. Let me show you some new trades. By the way, shameless plug. Seems like a good time to plug it. Sign up for your Power Trader trial. Get the emails. Get all the goodies between now and then. I might even toss in some bonuses for early adopters. I like people that are action takers. I'm an action taker. Let's get this done. Okay, so moving into trades ahead for this week. This is the blessing and the curse of waiting. So had we got in immediately, this would be positive. But Credo technology, I don't know what these guys do, but they're sitting right down here at a pretty solid support after a significant sell-off. The stochastic coming up through 20 is one of the tools I use to help find where some of these Fibonacci retracements might be coming to fruition. And I'm going to draw a fib. I'll teach you more how I do this next week, but I'm going to go off from, I don't think it's the top of that candle. There's a microscopic gap here. I'm going to use that. And on the way down, I'm just going to kind of check some of these levels here. This makes a lot of sense right there. And then, is there a second one? I'll leave this on here for now. If we're not careful, our screen can get super littered with fibs. So I'm pretty eager to get them off from there. I don't think we can go back that far. Yeah, it doesn't go back that far. So this is basically, we could extend it down. Let me try this. If we came all the way to the bottom, golly, it's pretty close. Pretty really close, actually. How is that not a confluence zone? I see it right there. It's the top of the gap. So some of you that have studied fibs with me know that gaps are super important. They're like a cipher. You know the Enigma machine during World War II, and if you had the right cipher, you could understand the code and the messages going back and forth. And gaps are like your little cipher. It tells you where to be drawing your fibs from. So I had a gap on the top, gap on the bottom, and we bounced right on that bottom Fibonacci line. Side note, all of you that registered for open house got a video from me that walked you through my settings, and I briefly went through my Fibonacci settings there. I'll do a little more detail on that next week, but if you want to know how all these charts are set up, that's all in that video. So it's about a 20-minute video. It's amazing, if I do say so myself. So I'm measuring from this peak. This is obviously the conclusion of something that was going on here. We're in an ABC retracement cycle, but remember, this can turn into a larger fractal. So we're trying to figure out how far back this will pull. I'm measuring to here. Some of y'all are freaked out that I'm drawing right to left right now. It's okay. I'm here to tell you everything is going to be okay. I do that with retracements because it makes my job so much easier than the ignorant people out there that draw from left to right still. I was a Lone Ranger in this 18 years ago, but I think it's starting to catch on because I don't get as much pushback now as I used to. I used to get hate mail from people about drawing from right to left. They just thought it was sacrilegious. I'm like, let me know how it works out for you. Then I put my flags on the side of the candle I draw from. It's microscopic, but there is a gap here, and I'm drawing from the bottom of that gap. So that's my first flag. This also, I'm measuring from the bottom of that candle, which is the top of the gap. And then, where's that last one? It was down here. That one doesn't really matter so much. Clean up my chart. There we go. Man, I'm kicking myself that we've already taken off on this. We could do a quick fib on here to see how far we might go. We're kind of coming up to it a little bit. So this might be a woulda, coulda, shoulda. CRDO. Well, let's just... Here's what's going to happen. Our position size is just going to be a lot smaller because our stop really needs to go down here. And then I'm going to put our... Golly, I think it's gone too far, guys. I really should put our stop, or at least a target down here at old support becoming new resistance. That's the downside to not jumping in immediately. We're 30 minutes into the market now. But, sometimes this works out in my favor too. I might just do a little trade to have fun watching it. Let's do a fib here. And if we come back to there, same target, isn't it? Pretty cool how that works out, though, that Fibonacci offering a resistance. I'm going to position size as though my stop is down here. I don't know that I would actually let it get down that far. So it's a $29 stop. I'm going to do a full R just because the position size itself is going to make this a smaller trade, and I won't let it get all the way down. 250 divided by 29 is 8.5 shares. Let's do 8 shares that we can buy, and we could do a little limit order on this. Shameless plug, everybody get signed up for $10. If you don't, what are you doing? Shoot, I forgot the ticker symbol already. CRDO. Come on. I don't love that candlestick. So it's 8 shares. I'll do a $29 stop, $29 target. Words are hard. I'll do it with a limit order. For some reason, you have to do it twice. I don't know why. It's dumb. But there you go. Got my limit order in. If it pops back down, it may grab it. It might not. I didn't really specify my take profit because I don't think we'll get to $29 today. And with the funded trading account, it will liquidate you at the end of the session. So 10 minutes before the market closes, it's going to get me out of the trade. So I'm just happy to ride with it. I'll watch it if I'm by my computer, which I will be today. And, if we're nice profit territory, then I'll hop in, or I'll hop out of that trade. Okay, let's go back to, where did my cursor go? Next up to bat is Tesla. I don't know that I love Tesla. So Tesla is interesting. If I delete this line here, Tesla looks like it came up, hit a resistance a second time, failed, and also just broke out of its uptrend, came on down. That's not great. That's really not great. But it did just come through earnings. It had great earnings. I say great earnings. Wow, it beat profit by almost 11% with only a 0.5% increase in revenue over forecast. That's interesting. It is a Son of Bonacci trade. Stochastic is just crossing up through 20 today. I think it is also bouncing on a 100, on the 200. And so that's where I come back in and put this as just a traditional support in through here. I think that really works too far back. So just a recent support. Since it's Fibonacci February, we could do a little fib. There's a gap. What did I say gaps were? Like little decoders. So let's decode. Let's just zoom all the way on back here to the beginning of this trend. What have I got in here? There's a gap. So that is the top of our box is right there where we bounced. Let me look through our other indicators. Bouncing off the 200, expos are bearish, which we expect. Stochastic is crossing up through 20. It's going on MAC. Ooh, bearish divergence on MACD. That's a bearish signal. Actually, kind of long-term bearish divergence because this was I guess that wasn't a higher high. It was an equal high, maybe. You know, I'm going to pass on Tesla. I think it could do okay, but I just have some concerns, and I like some of these mining stocks that are about to come up here. We'll keep it in the back of our head for now. Let's go to, how's our Credo doing? It's probably, as soon as I got into that trade, it's probably pulling back. Actually, did we even get triggered in? We might not have. Shoot. It's leaving us behind. No. Well, I'm not going to go chase it. The next three stocks are mining stocks. Hecla, I guess that's how you say it. They're a silver mining company. I guess the oldest listed silver mining company on the S&P 500. This is why I brought up silver again this week, because these tracked pretty parabolic with the value of silver. And what's obviously cool about silver mining companies is they can go out and get more of the product that is now worth a lot more money. But their overhead did not change overnight. The only thing that changed is they're getting 3 times as much for their product. Just to recalibrate your thinking here, my grandfather was a big silver collector, and he was always saying silver's going to hit $40 a share. And he died right before Thanksgiving, and I checked, and I'll be darned, it was $40+ a share. I was in the early 2000s buying it from him at like $19 back in here. I say early 2000s, really the 2000 teens, I guess. Yeah, I was buying it for $15 to $20 an ounce from him, physical silver, because it was kind of a cool thing we did together. Since November, when Grandpa died, let's just go from this low here, it skyrocketed up 142%. 142% from $40 up to $109, and spot was actually even higher than the ETF is. What's amazing, even with this huge pullback that we've had, so here's January 2nd, this candlestick right here, this dark candlestick, we still have stayed positive year to date, even with, what's the size of this sell-off? From its high, not from the close, but from the high to the low, was a 40% sell-off. What a wild ride. Silver sells off 40% and still stays positive year to date. Now, I told you guys, you heard it here. Like, even with these sell-offs, like, I'm not super bearish on silver. So That's why these mining companies hit my radar. They hit my scan because stochastic was below 20 along with some other parameters. So here's 3 back to back. I don't think we need to do trades on 3 mining companies, but I'll let you guys pick. We'll do some public participation here. There's one trend line. Earnings on this one, by the way, are coming up February 17th, so about 8 days. CDE is gold and silver, Coyor mining. I thought this one was interesting. It had some larger peaks and valleys, and let's see here if this parallel trend will work. It's more like a fan line, isn't it? This is more of a fan. Kind of like that. Fan line, if you've ever studied fan lines. So that's number 2. Earnings on this is coming up February 18th, so a day after. And then PPTA, Perpetua Resources. Stand by one second. I was trying to push through, but I have a little space heater to warm up my studio, and it was cooking me out of the studio. I had to turn it off. Perpetua Resources. And its earnings are out somewhere in March. We don't know yet, but not soon. And let me draw this one on here. This is almost kind of like a fan line too. Yes, I think that's it. Okay. A, B, and C. Here's A. Here's B. And here's C. I'll show you one more time, but my personal favorite is this one, Perpetua. It seems to be a more stable, bullish channel, in my opinion. Also, looking at when stochastic was below 20, Perpetua did well. Did well. Did well. Did well. Where are we at? There we are. A, B, or C? What do you guys think? Type in the chat pane. It's a completely unscientific poll. There's Hecla Mining, oldest listed mining company, silver mining company on the exchange. Coyor Mining. Perpetua. A, B, or C? Deanna says C. Burgess likes A. Okay. Not using my nomenclature, though. Check something real quick while you guys are writing in. For some reason, I was getting a request for somebody else to share their screen. I was like, I didn't even know you could do that. Don't know. CCC. I'm curious, Chris, what do you like about HL? Like, I don't dislike it. That's why I hit my list. But to me, that looks more stable. But I've learned to trust Chris Burgess, except he did lead me wrong on Avgo. I'm going to work at setting up a trade on this while Chris is typing in. I also feel a little behind the 8 ball on this one too, but here we go. So I think what we've learned from today's session is we need to start a little bit earlier. Target really is up at the top of this channel here. Maybe an intermediate target at the red line. See how we paused here before? But I'll put it up here. That's almost a 2R trade, 1.8R trade. Strongest pullback, or strongest uptrend with the least pullback. Okay. You know what? Why choose scarcity when you can have abundance? We could do a trade on both. Here's the situation I've put myself in. If it makes money, I'll take credit for it. If it loses money, I definitely will blame Chris Burgess. Be like, I wasn't going to do it, but he made me. I mean, that's a 3R and I don't know if we're going to get back up to silver highs again. And this is going to track pretty close with silver. Not exactly, but it'll track. So there we go. Sorry, CDE, you're out. Nobody voted for you. I don't think anybody voted for B. Yeah, nobody voted for B. Apparently I have a lot of persuasiveness, though, because everybody voted for the one that I liked, which is continuing on. I'm only getting further behind as I talk here. So $4 stop, that's that's 60 shares. Did I do that math right? Roughly 62 shares. We'll just do an even 60. Shoot, what's the name? These are new tickers for me, PPTA, because I don't normally live in the small cap world, but there we go, 60 shares with a $4 stop. I'm going to just put a $4 target in there today. If we made one R in one day, I'd be pretty happy with that. I'll buy the bid. It's going to conk out, and then I'll do it again. I don't know why, but that's what it makes you do. So we'll see if it runs down and tags that. That'd be nice if it did. We still have not got filled on our Credo. No! Confounded. Chris, this is what happens when I try to be professional and use limit orders. It runs away on me. Why do these things happen to me? Which every time I say that, it's a joke because I think it's like the dumbest question somebody can ask. Ooh, we just got kicked into something. I heard it. We're in PPTA. Let's go do HL. So this was a $3.42. It's going to be the battle of the precious metals, which mine will rule them all. So that's 73. We'll round to 70. I like round numbers. Not always, but oops, I about placed that on the wrong stock. HL. 70, and this was what size stop? 342. We'll just say 350. It's gonna conk out. By the bid, it's gonna conk out, and we're in. Okay, so we're up $4.50 on PPTA. I'm clearly beating Chris Burgess right now, who's down 75 cents, which is basically the bid-ask spread. So, now he's down $2. This will be fun to see play out. I definitely will be doing a YouTube video on this. Let me tell you about that time that Chris got me into a trade. I hope it wins. I hope that Chris's trade does remarkably well, because if Chris wins, we all win. I think I've got... You're an FCX. Oh, okay. I'll take a look at that. Freeport McMoran. McMoran. How do you say that? McMoran? It's like moron. McMoran. Bro, look at you go. This is almost a qualified trade for me. I was talking about FCX 2 weeks ago in Power Trader. You know, this is almost a quasi. I think I'm wanting this too badly for you, but it's almost a quasi pennant pattern, which is a bullish continuation pattern. We saw that over here too, which is actually when we got into our Freeport McMoran trade, and then pulled back, but kind of looks like another. We'll see how today's candlestick ends. Could be another pennant pattern. I think I've got enough mining companies, so I'm not going to enter this FCX trade, but that's stellar. I like it. I think Freeport is a large cap stock. I can't think of a good way to fact check that, but it seems like it shows up in the S&P 500 list. Okay, last one here. Where did my menus go? Normally there's menus over here. Oh, I know why. Shoot, there's a hotkey to go full screen mode, and I forget it. Shoot. I might have to reload the page because all my toolbars disappeared. Please come back. There we go. AeroVironment. I don't know what these guys do. Oh yeah, aerospace defense. Golly, all these took off this morning, but still. So here's another one. Solid support, maybe even a little bit of a rising support on this. Ooh la la. I don't love the double top, but I definitely think we are, if I draw this more horizontal, we are a solid pivot point going back to 2024. Resistance, a gap here. Again, gaps are like little ciphers. Support, 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 support. There is a fib on this, I believe. Let me make some more space for us here. Let's go from that gap down just to here. That looks pretty good. Not so much current events, though. And this one's not far enough. Maybe there wasn't. Yeah, this one's kind of nullified by this move here. Yeah, that's not as stellar of a fib as I remembered. I think that's the box there. The temptation would be to say that it worked here, but we're not measuring. Well, I guess we kind of are, because I would measure off from this peak, and we're pretty close to that. So that would have made sense. It seems like we're bouncing a little early here, but as long as we trade to or within, but not below, a box that next week you'll see show up here as green, once we do that teaching, means we're still in this bullish trend. We've got a stochastic below 20 turning up. Earnings are coming up when? Not until March. Let's see how this typically does when stochastic is down here. Bullish, but a little bit of a pullback. Not bullish here. This actually continued on down. See, I'm trying to find low stochastic. Stochastic. Here's another one. This does not happen a lot. In fact, I can't remember the last time this happened, but stochastic below 20 and price action continued down. I like the support, but I don't like the stochastic oscillator on this. What else could I learn? We're below the 100. I don't think so, guys. I'm going to talk myself out of it. For those that are new to Power Trader, I get my analysis about 40% of the way there, like, so I'm not wasting your time. But then I kind of work through it. Oops, I didn't actually look at that. I'm just clicking through. I work through it in real time so you can see the thinking process. There's pros and cons to that. I think I'm going to pass on this. I like it from a support perspective, but that's about it. MACD could be argued as quasi-divergence or certainly bearish, even if it's not divergence, but it's making lower peaks. The simple moving averages, it's below the 200, which means it's only a matter of time until the 100 begins to curve over. Yeah, I don't think so. I don't think so. Check in with the S&P 500, not SP. Y'all, I'm so story of my life on Morning Glory. What a great trade. What a great trade, y'all. Good job on Morning Glory. Credo, I don't know if we're going to get into that or not, if it pulls back a little bit. After this early morning rush, we might get into it. You know what I could check here? I don't think it qualifies. One last one, since we went long today. Nope. Actually, I'm lost my mind anyway. I was looking at the 30-minute throwback, but we're an hour into the market, so, but it wasn't a qualified 30-minute throwback anyway. Okay. Let me put this link in here. Type in one in the chat pane if you guys enjoyed Power Trader, especially if you're new here. Get you a $10 trial and come join us for a full 4 weeks. It's pretty awesome. Thanks, Chris and Deanna. And I'm excited to figure out how we can make it better. I wrote this down at the beginning of the year. I don't know if y'all can still see it on my video. How can I make PowerTrader? How can I improve PowerTrader today? It's what I do best. And so just kind of some inside scoop here. I think this is going to be coming what would have formerly been known as my apprenticeship. I love doing practical trading, practical analysis. I don't have all the fancy stuff. I'm just kind of a simple trader, which is what PowerTrader is about. It's great for those that are starting. It's great for those that are struggling. And it's even great for those that are experienced if you want half a dozen trades handed to you. Sometimes we've got 2 or 3. Sometimes we've got 6 trades that we'll look at. I don't usually go beyond that because of time constraints. We run out of time to analyze everything. But let's go. Are we winning? I feel like based on my P&L, oh no, that's HL. CDE was the other one. Sorry. What is? Oh yeah, Cower. That was the. Wait, is that the same as CRDO? That's Credo. So many weirdly named mining companies. Thanks, Mary, Scott, Ricardo, Al, Dan, John. Awesome. Wonderful. Well, if you liked it, the best way you can show your appreciation is get you a $10 trial. Come on over here, join us in PowerTrader. If we get enough interest, maybe I'll do a second PowerTrader session weekly. But I want to get this community rocking. I want to see a large group in here, and I think it's going to get more exciting the bigger it gets because the contributions, the conversations are all going to get better and better. You're welcome, Martin. Good to see you, friend. Blessings and favor on your trades, everybody. I hope you use these trade ideas to put fat stacks of cash in your jeans. We already did well on the Morning Glory this morning. I'm pretty optimistic about our mining companies, and I think it's going to be a good week of trading. If you have any questions, email us info@tradesmartu.com. Otherwise, get signed up for your $10 trial. Come join us for a full month. Finish out Fibs and Feb. I'm giving you the best of my notes. I'm not holding back. It literally is $1,000 worth of content I'm sharing for $10. So come join us. You're well. Hey, Irving, good to see you, my friend, my Nashville friend. Blessings, guys. I will see you next week in PowerTrader. Take care.